Hello, I'm Bernard Hickey with the Daily Briefing from interest.co.nz. In the news today, we look at the latest comments coming out of the Federal Reserve from Chairman Bernard Hickey and what they mean for global interest rates and our currency. We'll also examine what's happening at home in our mortgage market. Firstly, we'll dive into the stats for the September quarter. Now, they show that ANZ National has been the big winner, while Westpac, BNZ and Kiwibank have been struggling. Then we'll look at the latest moves in mortgage rates, because now Westpac has joined ANZ in raising its fixed mortgage rates by 20 basis points. Firstly, it's worth having a close look at a speech overnight from US Federal Reserve Chairman Bernard Hickey. His appearances haven't quite attained the must-see TV status of his predecessor Alan Greenspan, but his views are increasingly influential, particularly with the US economy appearing to be on the brink of recession and US interest rates set to fall. Bernanke was particularly clear last night about his view on the economy and interest rates. Essentially, he said the slump in the housing market and the turmoil in credit markets posed a significant threat to US economic health. He said he was ready to take substantial additional action, remember that quote, to curb that threat. Remember, both Merrill Lynch and Goldman Sachs have warned the US economy may already be in recession. And last night, the big American chain stores reported falling sales in December. Chains such as Macy's, The Gap, Abercrombie & Fitch all reported falls. Only Walmart of the big chains saw increases. Observers interpreted that comment about substantial additional action to mean the Fed was likely to cut official rates by 50 basis points to 3.75% when its open market rate setting committee meets on January 29 and 30. So what does that mean here in New Zealand? Currently, our official rate is 8.25%. So that means the differential would blow out to 4.5%. That can only mean upward pressure on the New Zealand dollar. Now let's look at the mortgage market here in New Zealand. Stats compiled by interest.co.nz show ANZ National punched well above its weight in the mortgage market in September, taking share off both BNZ and Westpac. ANZ National won 42.2% of net new mortgage lending in the quarter. Now that's well above the third share that it has of the total mortgage book and the 32.8% share it won in the June quarter. After a slow start during the merger of ANZ and National Banks in 2003, the combined group has steadily gained on its rivals through 2006 and 2007. The biggest loser of market share through late 2007 has been Westpac, which has retreated back to the levels it was stuck on through 2004 and 2005. Remember, back then it was seen by observers as sitting on the sidelines during the unbeatable mortgage war sparked by BNZ. Westpac's market share bounced up in late 2006 and early 2007 when it mined its databases of existing banking customers for those who'd jumped ship and found mortgages elsewhere. It then marketed directly to those customers. It appears those low-hanging fruit have been plucked and Westpac is back to its usual market share. Finally, let's look at the latest interest rate news here at home. Yesterday, Westpac announced it would increase almost all its fixed mortgage rates by 20 basis points. For example, its key 2-year rate has risen to 9.6% from 9.4%, although it has kept its 30-month or 2.5-year rate steady at 9.2%. This seems to be the hotspot right now in the mortgage market where many home buyers are looking for rates. Westpac's move follows an identical one from ANZ last week. Both are saying turmoil in international credit markets has increased their wholesale funding costs, and they're passing that on to their customers. The moves also follow similar increases in Australia, where the same banks, plus Commonwealth Bank, who own the ASB, have increased their floating rates because of higher wholesale rates. That has triggered a political reaction there in Australia, given the moves have not followed an increase in the official cash rate. The interesting thing here, though, is that the rate hikes don't appear to follow any move in the respective wholesale swaps rates that fixed rates are based on. However, I had a chat with Westpac's institutional banking market strategist Michael Gordon, and he says the banks are paying an extra margin on top of that swaps rate of around 30 basis points, and that's up from 10 basis points in June last year before the US credit crunch hit. I'm Bernard Hickey for the Daily Briefing on interest.co.nz, and we'll be back again on Monday. See you then.